Welcome to another weekly session of Informally Formal, where we try to bring you topics of personal interest, national, as well as international interest. Our today's topic is banking, present and future in a COVID world. And we have someone very important with us today, and someone that knows about this industry, has spent decades in the industry. He is the country head, CEO of Standard Chartered Bank, Bangladesh. Naser, Ezaz, Bijoy, welcome.
Good evening. Thank you for having me.
My first question to you is the current state of banking around the world, and then, of course, paint a picture for us as to how do you see it in Bangladesh. Over to you, Naser.
Thank you. I think it's very pertinent question, especially for Bangladesh. Before we come to Bangladesh, let's talk about what we are seeing globally. Clearly, this is an unprecedented situation where the credit risk is actually significantly escalated. Therefore, if you look at the results of Q2 for most of the international banks, they're showing significant amount of impairments. You would have seen Citibank's result, which has shown 76% decline of net income. Similar numbers for, I think, JP. JP is one of the best run bank in the world. They still had, I think, 50% of drop. Wells Fargo reported loss. So this is going to be a kind of expected scenario for 2020 for most of the banks around the world. And all the banks will now try to see how they can optimize their balance sheet. How can they actually make the operation lean, cost effective, so that they can sustain the changes. The world will be quite very different from what we have seen in the past. So that's from the global perspective. Now, if we come closer to home, banking sector was already facing challenges, especially in the areas of liquidity and credit risk. Currently, after the COVID has started showing its impact, liquidity situation has improved to some extent, primarily for a few reasons. One, obviously, when the economic activity is muted, the demand for money goes down. But in addition to that, what has happened is central bank has taken a number of initiatives in terms of fiscal and monetary measures, which has, one, reduced the idle money that has been blocked in central bank in the form of credit cash reserve ratio. And they also provide a lot of financing options, refinancing options that improve the liquidity. But what has deteriorated is the credit risk environment. Now, because of the COVID, in an environment where the banking sector was already struggling with 10+% of non-performing loans, and if you add the restructured loans, it will be close to 20%, right? And now, when the ability for the corporates to generate cash came down, be it corporate, be it SME or individuals, obviously this will have an impact on their repayment capability. Now, this may not be manifested in the financial statement that we'll see end of the year for two main reasons. One is obviously the relaxation of the recognition of the losses. Secondly, there are payment holidays and moratoriums provided to the borrowers. Now, this is primarily because of a difference between the local standard of recognition of losses versus international practices. If you look at IAS 9, which got implemented globally in 2019, the difference between the current practices of new guidelines of IAS 9 versus IFRS 9 versus the previous one is that now, whenever there is an apprehension or there is an acknowledgement of the deteriorated credit risk, you need to recognize the loss upfront for the entire tenor, which means there will be significant higher amount of impairment that will be reflected. And if you look at the numbers that JP Morgan or Citi has shown, is $10 billion of recognition of loss in one year. Doesn't mean that entire 10 billion will be in loss, but it's a conservative approach to recognize the potential loss for future. This is called expected credit loss recognition.
You know, IFRS 9 that you were referring to, that has gone into effect now. And I know financial institutions have been working on it the last couple of years as it came through. Now, how does it work vis-a-vis when we in Bangladesh restructure loans?
What happens is that, IFRS 9 would have actually not recognized this restructured loans and would consider this as a delinquent portfolio and require impairment to be done in a normal situation. But because of this COVID-19 pandemic situation, IFRS actually come up with kind of a clarification in March 2020
Right.
to address how do you recognize this situation. Now, what it does, it tells you to observe two things. If there is a genuine impact on the financial of a client because of the pandemic situation, and secondly, as a proof point, if government actually recognizes this pandemic and provides support through stimuluses, this is a kind of a proof point for qualifying that portfolio to be taken outside the purview of SICR, significant increase in credit risk. So for that, you don't really need to automatically provide for that portfolio. Having said that, there's always a supervisory process where if you believe that this is not a temporary phenomena, the client will continue to show the delinquency even after the pandemic situation is over, which means you need to recognize it. So there is a concept called management overlay of expected credit losses. So your model will give you a number, then you apply your judgment as a management, supervisory management, and then you actually recognize a portion of the losses upfront, even if the model doesn't require you to do so.
Right, right. Yeah, we, I'm sure we could devote an entire session to IFRS 9 and not be done with it. So, in any event, let's just move ahead. What do you see as significant opportunities and challenges as far as Bangladesh is concerned, vis-a-vis, of course, the banking sector?
Yeah. So the challenges, I'll start with challenges because that is more pronounced now. The challenge that we have faced currently is, in addition to the deteriorating credit environment, there is a regulatory requirement of capping interest rate, right? Of single digit 9%, apart from credit card. So that actually takes away, rather, that impairs the bank's ability to price the risk appropriately. And secondly, because of the muted activity, you'll obviously have a challenge in terms of balance sheet growth, volume growth, and thus revenue growth, right? Thirdly, and very importantly, specific for this situation, is obviously the credit impairment, right? And while we are saying that there is a regulatory support for extension of the non-performing loans, and you won't recognize this, but there will be a cliff impact. Right? When I say cliff impact, is it is not due till 30th of September 2020. Then it becomes, especially the working capital portion, which is 80% of the entire loan assets of the country's banking sector, will become due in the next 3 months. So there will be a significant spike in overdue loans in the 3 months following September, unless the September date is extended. Now, on the opportunity side, government has already announced $12 billion of stimulus packages. These will have to be driven for employment generating activities, including infrastructure projects, right? And infrastructure projects are a big source of employment generation for those who are getting laid off, right? The workers and all those marginalized group. So this obviously means that there will be infrastructure activities, there will be banking activities, there will be movement of funds within the country, across border. All those things will actually provide banks opportunity to generate revenue.
Now, sir,
secondly,
I need to just very quickly, re-emphasize a couple of things that you just now you mentioned. One of them is capping of the lending rate.
Interest rate. Yeah.
The interest rate, yeah. Interestingly enough, obviously the way I simplistically look at it is you start with the inflation point. And for someone to put money as a customer, to put money in the bank, they need to stay ahead of inflation. And then the bank needs to make money. So it's a pretty simple math. That's one. And also, very quickly, the government announced a pretty significant budget. And my question to you, in the past, the government has relied heavily on commercial borrowing from the banking sector. How would that impact in terms of the banking sector in Bangladesh? How do you see that panning out, Naser?
Can I complete my other opportunity space before I come to that? That's not, it won't take long. So basically, I mean, the other opportunities that I see is that, to ensure that the economy continues to prosper, there's a significant role that will be played by the small and medium enterprise. Obviously, with the interest rate cap, it is not possible because no bank is going to take that risk because generally SME will have a higher risk profile and higher operating costs to service this SME sector, right? So we have been encouraging central bank to come up with a partial guarantee scheme. Now, that is something which central bank has taken on board, and they have prepared a draft guideline. Obviously, there are some modification which is required to ensure it is effective and it will actually be successful. So if that comes through, this will be a game changer for a lot of banks and the SMEs. Because the biggest challenge for SMEs are access to finance. So this will open up that window. So this is an opportunity for the banks and the SMEs. Absolutely. And thirdly, foreign currency lending. There has been a lot of restrictions on foreign currency lending, even for the exporters. And you know that LIBOR has come down significantly. Taka lending is still, the difference is quite significant. Therefore, there is an opportunity for the banks and the clients to be benefited from a foreign currency lending. And because it's a foreign currency, it's for the exporters, there is a natural hedge. So you manage the FX risk also. So these are the opportunities I wanted to highlight. Now, coming back to your point on borrowing from the banking sector. One good thing that the government has done last year was reforming the saving certificate issuance process. What it did, the borrowing rate has significantly come down from, let's say, 11+% to 7-8%, or it will also come down further. Centralized treasury concept that government has already introduced, and have already started pooling money from funds which are unutilized in the corporations levels, right? This will, what it happens is that, when a finance ministry needs to pay or for fund a project, they will borrow from treasury bill or from central bank to actually invest in this project. And many of these companies or the corporations have large deposits on one side, and because these deposits are coming, and government has borrowing on the other side. So it's very inefficient way of managing. This process will mop up the surplus liquidity from the corporation level and upstream it to the central treasury, so that the net amount will be borrowed by the bank, central bank. Now, the challenge is, despite this, with the infrastructure commitment that government has, and the lower collection because of the pandemic, government will have to borrow more. If you look at the overall borrowing of government of Bangladesh, external debt is 15%. Even if you have entire $12 billion borrowed from overseas locations, it's still going to be sub 18%, which means it's better than India, far better than Vietnam, Malaysia, and other countries. Overall total debt will be higher, 35%. It can go up to 40, 45. It's not still alarming. So I think this year, the priority is to inject liquidity in a project which are employment generating, and there's a development angle to it. So I'm not that concerned. Frankly, Bangladesh actually entered into these financial challenges in a much stronger position compared to many other countries. And that is why Bangladesh government did not really avail the payment holiday options which were given by World Bank during this crisis.
Naser, you're absolutely right. Coming into this year, the debt to GDP ratio was about 34%. So even if one of the first avenues we should look at is borrowing from international sources, IMF, for instance, and then of course then there is the option of local borrowing, and the very least desirable, but nevertheless an option is to print money.
Even if you can print money, right?
Right,
Even,
exactly,
because
exactly.
if you look at the history and the countries when they suffered when they had higher foreign currency borrowing.
From an external debt standpoint, we are in a very strong position. So our forex exposure is not that much. So from many areas, you're absolutely right. Naser, let's move on. We're getting to the tail end. How time flies.
Yes.
When you're talking about interesting things, time flies. Anyways, you very quickly tell me. I was looking at Bill Winter's interview, your global CEO, and he was talking about doing well but doing good, right? Doing well but doing good, impact philosophy. So now we are familiar with impact financing, where you do some social or environmental good along with the project. So given that framework, how do you see that panning out in Bangladesh?
So, as a bank, we are moving away from corporate social responsibility to socially responsible corporates rather, because, it's quite different. Corporate social responsibility is about earmarking a portion of your profit
Absolutely.
in good cause, right?
Yeah.
Corporate socially responsible corporate is very different. Everything that you do with a lens that is seen as responsible.
Right.
So therefore, we are actually significantly increasing our focus on sustainable financing options, be it renewable or aqua in different areas. For COVID response plan, we have already declared $1 billion globally as a response to COVID-related healthcare activities, be it pharmaceuticals, healthcare, or hospitals, or whatever. We have already started financing clients locally. Apart from that, there are a lot of Sanatar globally has actually launched a foundation called the SC Foundations, where $50 million will be distributed on these purposes. Bangladesh has already received $1.6 million from that, which we have already invested, and we have additional funds to engage the community, from where the bank has already grown so much.
Okay, that kind of answers the other question that I was going to ask you is, in terms of SCB doing, what are you doing specifically in Bangladesh? And the other one, of course, in a way you kind of answered, is, looking at the overall SDG implementation, from an SDG implementation, as we have seen around the globe, the focus has, because of the pandemic, the focus is temporarily, so to speak, because climate change is a bigger issue and it's not going away anywhere in a hurry. So it has shifted a little bit, the focus has shifted, but nevertheless, you look at it from the lens of whether you look at it from an ESG lens, or you look at it from a PPP lens. So all businesses. So I understand, I guess what you're saying is, from taking away a little sliver of the money to do social responsibility, now you're overall, the entire business, you look through that lens, which is an excellent way of really doing business. So I congratulate your CEO, yourself as well, for this global vision. Naser, we're almost at the tail end. I would like to ask you really now, if you would kindly, through your experience and being in this market, what would be some of your specific policy reform recommendations that we ought to follow in Bangladesh?
See, the only way we can come out of this pandemic situation is by doing few things. One is ensuring our healthcare system becomes robust so that we do not get affected. Secondly, the domestic economy needs to be stimulated, because although export is something where we are focusing a lot, but it's only a small portion of the country's GDP. 70% is still domestic. So we need to stimulate the domestic economy and focus on employment generation related activities. Thirdly, provide support for workers in the export sector and returning diasporas. To do all this, you need to have an investment friendly climate. And for that, things that you need to focus on is foreign exchange regulations. You need to improve the governance standards, so the policies should require the governance accountability. Thirdly, the capital market regulations need to be more credible and simplified. Fourth, the digital enablement needs to be encouraged and incentivized. And lastly, I will say that we should really focus on cash. I would say less cashless. I would say less cash economy, which will help us to improve the governance standard and complement other things that I've mentioned. The policies should cover all those areas that I've just mentioned.
Very good, very good. Naser, you hit quite a few very, very good points. I've always maintained that the IT, of course, digital Bangladesh, thank God for that, that the initiatives that the government undertook many years back is seen in the present situation. That has really come in very handy. But we could, I believe, from an IT standpoint, I look at it like this. The infrastructure, the IT infrastructure, look at it as like building roads and bridges. Now, some roads and bridges, you have tolls, but a lot of the roads and bridges you provide, that way the economic engine runs through those roads and bridges and brings in revenue, right? So infrastructure, IT infrastructure bandwidth, I believe, should be made absolutely free. That is an investment that should be absolutely will pay off. So in any event, Naser, I would like to thank you so very much for your time. I know you're a very busy person. Thank you for giving us your time today. And I look forward to bringing you again, hopefully, on a more specific topic down the road. And with those few words, I guess I'd like to invite everyone for our next session. Till then, you all be safe and take care of yourself. Bye-bye.
Thank you, Akber. Stay safe. Bye.